Hey guys, in this lesson, first I'll explain what it means to make sense of price movement. Then I'll explain several price action concepts that you're going to need in order to begin making sense of price. And then finally, I'll explain how you can begin taking your first step in making sense of price by becoming able to read price at the basic level. Okay, so let's get going. Okay, so the definition of making sense of price movement is that you understand what's happening in the price in a way that allows you to profit from its movements. Okay, so the first thing we want to do is to learn to separate what we need to know and what we do not need to know. Okay, so we want to make sense of price movement in a way that allows us to profit from its movement. And if it doesn't allow us to profit from its movement, then we don't need to know that information. So, for example, if an analyst is talking about how price is falling at the current moment, well, that information does not allow us or help us to profit from price movement, right? Or moreover, we'll often hear analysts talking about how price moved many years ago. And again, that doesn't help us to profit from price movement. Okay, so just know that there's a lot of information out there that's fun to intellectualize and ponder. However, it doesn't help us to profit from price movement. So we do not need to know that information. And we want to stay focused on making sense of price movement in a way that allows us to profit from its movements. Okay, so now let's go ahead and find out how we could start making sense of price movement in the correct way. Okay, so the initial goal. Now, the first thing we're going to need to have is the ability to predict the future direction of price. Now, is price going to go up, range about, or is it going to go down? Okay, but just having a way to predict the future direction of price is not enough to reach our main goal, which is making sense of price movement in a way that allows us to profit from its movement. Okay, so let's figure out what else we need in order to achieve this goal. Okay, so the refined goal. So let's say current price is at this point right here. And let's say we had a method that predicts the future direction of price, which in this case is up. Okay, but in order to profit from price movement, we also need to know how far price will go in the predicted direction. And moreover, how far price will not go in the opposing direction. So in other words, we need a method to know the target and stop loss points. Okay, so these are the three things we need to know in order to profit from price movement. That's the future direction of price, a target, and stop loss level. Okay, and the main reason we need a target and stop loss level is because it defines the risk and reward of a trade. And this risk and reward is going to define which trades we take, and more importantly, which trades we're not going to take. Okay, but there's many other reasons why we need a target and stop loss level. Now, first of all, in terms of targets, you want to remember that markets are ranging the majority of the time. So let's say we knew the future direction of price and we bought at this level right here. And let's say we did not have a target level. Now, because markets have the tendency to range, even if price comes up to this level, if we did not take out our position to earn some profit, a lot of times price will just come right back down, then come up again, then come back down, and repeat this over and over because that's the nature of markets. Markets tend to range the majority of the year. Okay, so having the ability to know where we're going to take profits is going to give us the ability to consistently take profits out of the market. Okay, and moreover, another reason why we need a stop loss level is that by simply having a stop loss level, it's going to eliminate a host of psychological issues that come up while you're in a trade. So for example, if we didn't have this stop loss level and we bought at this level right here, if price begins to go in the opposing direction, which is down, traders will tend to want to hold on to their position, hoping that it's going to go up in time. And the more it goes down, that tendency to want to keep their buy position is going to increase. Okay, and you can see the disastrous effects that can have to a trader's account, right? Every time price goes down, our need to hold on to this buy position increases and could gradually empty an account. Okay, so now let me show you how we can begin to understand these three elements we need to know in order to make sense of price movement. Okay, so reading price. Now, at the basic level, you want to remember, we want to have the stance that we're allowing price tell us which way it will go in the future. And we want to remember to not enforce our whims of what price will do. Okay, so always keep that in mind. Now, moreover, reading price is similar to learning a new language. So when we begin to learn a new language, we start off with basic vocabulary, right? Now, this is the same as what we learned in the prior lessons. So we learn how to read a candlestick to know how much future long or short strength it has. And moreover, we learn how to read a trend line to figure out how much long or short strength it has, right? So in other words, when we see the word apple, we automatically know that it refers to an apple, right? Or a bomb, whatever that is. In the same way, when we see a certain candlestick, we automatically know that it shows long strength. And moreover, as we get better at a certain language, we go on to basic grammar, right? Now, it's the same thing in reading price. As we gradually learn the language of price, we could start deriving more complex ideas, which is going to allow us to more precisely predict the future direction of price. All right, so before I explain how to read price, there's a couple basic price action ideas that you need to understand in order to read price efficiently. Let me go ahead and explain those. Okay, so the value of price. Now, a basic concept in price action trading is that current price is more valuable than past price in terms of the analysis process. So in other words, the price used to predict the future direction of price, as well as the target and stop loss levels, is less valuable in these areas when compared to the current price right here. Okay, but you want to keep in mind, past price does have value, but it's just that current price has the ability to override past price. However, the other way is not true. So past price will never override current price. Okay, so let's go on to another basic concept. All right, so time frame relationship. Now, in price action trading, using the higher time frames for analysis is not an option. It's mandatory. Okay, so whether you're a day trader or a long-term trader, when you're reading price, having an understanding of what's happening on the higher time frames is mandatory in order to predict the future direction of price, as well as the target and stop loss levels. Okay. Okay. And the basic way you want to look at the relationship between the time frames is that the higher time frames, so for example, a weekly time frame, is the bigger wave or current in a given currency pair's price, which is down in this case, right? And the lower time frames, so for example, the 4-hour chart, are the currents within the bigger wave. So as you can see right here, this 4-hour current is going up while the weekly is going down. And moreover, at this point right here, the 4 hours current is down, which is along with the weekly current, which is down, and so on and so forth, right? Okay, and the reason why we need to know the higher time frames current is simply because the higher time frames current is innately stronger than the lower time frames current. Okay, so keep that in mind. In order to read price, an understanding of what's happening on the higher time frames is mandatory. Okay, so now that we know the basic concepts of price action trading, let me explain the steps involved in order to read price at the higher levels. All right, so the first step. Now, the first step in reading price is through biases. Okay, and a bias is the initial step in beginning to read price. And the price used to analyze a bias is relatively past price. Okay, and then as we get better at reading biases, we go on to the next stage, which is current price. Okay, and current price uses price closer to what's happening right now. Now you want to remember that current price, since it uses price closer to what's happening right now, it has the ability to override a bias. Okay, and as we get better at reading price and we climb these steps, we learn how to read price through price fluctuations. Now, price fluctuations really only uses the most up-to-date price for analysis, and a price fluctuation refers to how fast price goes up or down at the current moment. Okay, so these are the steps we need to follow in order to read price and ultimately be able to speak and understand the language of price. All right, so now let's go on to the basics of how to read a bias. All right, so the basics of a bias. Now let's say current price was right here. Now a bias is going to give us three things: the future direction of price, a target, and a stop loss level. So in other words, the future price should go up at least to this price level right here, and price should reach this price level right here before reaching this stop loss level right here. Okay, and you want to remember a bias is different from a trend. Now there's two basic differences. Now number one, a trend only gives you the future direction of price. It doesn't give you target and stop loss levels, right? And moreover, a trend comes with it a sense of permanentity. While a bias, like I explained earlier, always has the possibility to change directions through current price. Okay, because you want to remember, a bias uses past price for analysis. All right, so let's go on to how to find this bias. All right, so how to find a bias, the rules. Okay, so rule number one is that you want to find two recent major pivots. Okay, right here and right here. Okay, and the difference between a major pivot and a minor pivot is that major pivots are areas in price that price made a big turn in terms of direction. Okay, so that'll be right here, right? Because price was going up and they made a big turn down. Now these are minor pivots. Now this is a major pivot, right? Because price is going straight, but made a big turn up at this point. Okay, these are minor pivots also. Now this is a major pivot. Now this is a major pivot right here also because price is going down and start to go flat. Okay, so the first thing you want to do is find two recent major pivots to measure the strength of. Okay, and number two is that you want to use price elements on these major pivots to measure the long and short strength. So you want to measure the short and long strength of this pivot right here to derive how much strength short there is in this case. And you want to do the same right here for this major pivot to derive how much long strength there is. Okay, and if we find that there is more short strength than long strength, so for example, if there was 5 short strength and there was only 3 long strength, we'll refer to this bias to be short. Okay? Okay, so after we find out which has more strength, we could then go on to number 3 and derive the future direction of price, which is down in this case, and moreover find out the main target level, which is right here, as well as the main stop loss level, which is right here. Okay, so a bias, like I showed you right here, is what allows us to make sense of price in a way that allows us to profit from its movement. All right, so let me just finish off with a demonstration of this. Let's go over to a chart. Okay, so this is the pound dollar weekly chart. Now the two major pivots we're going to use is this pivot right here against this pivot right here. Okay, and then we want to derive how much short strength there is and long strength there is. Now in this case, we're just going to use the things that we learned up until now. Now, first of all, in terms of candlesticks, we have this nice full candle, which provides short strength. However, on this pivot right here, this candle right here is rejected at the top, already making the long strength of this pivot weaker. Okay, so strictly from candlesticks, we already know that there's more short strength than long strength for this bias. Okay, let's see how much strength there is given through trend lines also. Get rid of these and zoom out. Okay, so in terms of the short strength for this pivot right here, we have this legitimate trend line right at this level. And again, it's legitimate because there's 3 touches on it, right? 1, 2, and 3, and came right here on the 4th touch. All right, so there's 4 touches for this trend line right here. And moreover, for this bottom trend line right here, there's also a legitimate trend line that's attached to this pivot, which also has a total of 4 touches. That's 1, 2, 3, and 4 right here. Okay, so in terms of trend lines, there's equal strength amongst these pivots. Okay, and a very important thing you want to remember is that when you're measuring strength, You always want to check the higher time frames for any elements that could possibly provide strength. Okay, but you never want to look at the lower time frames. So for example, since we're looking for a weekly bias, we want to look on the weekly chart as well as the monthly chart or even the yearly chart for any possible elements that provide strength. All right, so let's check out the monthly chart. Okay, so on this monthly chart, those weekly pivots formed in these areas right here. As you can see, there's a monthly trend line that's attached to this pivot that just became legitimate. 1, 2, 3, and touch on the fourth one right here. Okay, however, there are no legitimate trend lines for that long pivot right here. Okay, so let's go back to the weekly chart to combine all these elements, figure out the strength differential. Okay, so back on this weekly chart, in terms of candlesticks, there was more short strength than long strength right here. And moreover, in terms of trend lines, there's more short strength than long strength. Now that's because we had that monthly trend line. Okay, and another important thing you want to remember is that the higher time frame price elements innately produce more strength than the lower time frames. Okay, so for example, this trend line right here on this weekly chart, this weekly trend line have 4 touches on it. And moreover, that monthly trend line also have 4 touches on it, right? And just because that monthly chart is a higher time frame, it's going to produce more strength short. Okay, so analyzing price through a bias, it's going to give us 3 things. Let me just zoom back in here. Okay, so that bias predicted the future direction of price, which is short. And moreover, the main target, which is at this price level, and the main stop loss level, which is right here, which resulted in accomplishing our initial goal of making sense of price in a way that allows us to profit from its movement. Okay, so let's do one more example. Over to the euro dollar chart. All right, so on this euro dollar weekly chart, first we want to find 2 major pivots. That's this one right here and this one right here. And first we want to do our candlestick analysis. Okay, now we have a nice rejection candle right here, which provides a lot of long strength. However, right here, although we do have a rejection candle, it's not as strong as this one, right? Right, because this candle right here was able to close with a green candle, showing that price came all the way down to these levels. However, was pushed all the way up to these levels right here. While this candle right here, although it was rejected, it wasn't able to close with a red candle, making the rejection not as strong as this candle right here. Okay, so in terms of candlesticks, there's more long strength than short strength. Let's go ahead and see trend lines. Let me zoom out. All right, so we could see that there's a legitimate trend line right here with 1, 2, 3, and 4 touches on it, providing short strength, while there's no trend lines for this long pivot right here. Okay, and we also want to check the higher time frames. Go to the monthly chart. Okay, so on this monthly chart, that long pivot was right here and that short pivot was right here. Now, although we didn't cover diagonal trend lines, let me just show you an example of it. So right here, there's a legitimate diagonal trend line with 1, 2, 3, and 4 touches on it, which is providing a lot of short strength, while there are no monthly trend lines for this long pivot right here. Okay, so let's calculate all of these back on the weekly chart. Okay, so on this weekly chart, although there was more long strength than short strength through candlesticks, we could see there was a weekly trend line as well as a monthly diagonal trend line, both providing short strength, which tells us the future direction of price is down. And moreover, it tells us the main target level right here and the main stop loss level right here. So in other words, it tells us that price should reach this pivot right here before reaching this pivot right here, which again allows us to make sense of price in a way that allows us to profit from its movement. Okay, so here's the key takeaways. Number 1, in order to make sense of price in a way that allows us to profit from its price movement, we need to know 3 things. Now, number 1 is the future direction of price, and number 2 is the stop loss level, and number 3 is a target level. Now, moreover, keep in mind, if you're like the rest of us and trading funds are limited, in order to make a meaningful profit, the use of leverage is mandatory. And if you use leverage without a stop loss level or a target level, you won't be able to fully maximize the potential of leverage. And moreover, you'll be irresponsibly risking your trading capital. Okay, number 2, when reading price, always keep in mind the basic price action concepts, which are the value of price and the time frame relationships. And remember, these two concepts apply to any type of price action trading. So whether you're a day trader or a long-term trader, utilizing these two basic concepts is not an option and it's mandatory. Okay, number 3, learning to read price through a bias is the first step in reading price. Now, although a bias is the first step in reading price, you want to remember it's also the most important because the bias provides the framework that we can use to implement higher levels of price action techniques. So if you look at a chart without a bias and prices going up and down and sideways and all over the place, it's very hard to have a sense of order within a chart. But a bias takes the chaotic nature of price and puts it into a framework that we could then apply higher levels of price action techniques. Okay, so that's it for this lesson. If you guys have any questions, let me know. I hope you guys have a great day, guys. Thanks for watching. Okay, bye.